If you're a trader who struggle to understand the market, this video is here for you. Welcome back to another market breakdown where I'll be helping you understand how to make smarter decisions throughout the trading week. So right now we are looking at gold on a daily time frame, right? So as we can see here that on this support level right here, we can see how price end up, pushing up, retesting this low, breaking out of this, right? So it made a higher low, which is higher than the previous low, breaking this high. So what does that mean right there? Is that how it sound? Price end up pushing up, fell fell in this overall low, breaking this high, making a higher high. So now we at a retest on this support level. So the question is, can we go up or can we go down? So this is where we at right now in this current cycle of here. Like I told y'all before, if price is to push above here, right, as we can see here in the demonstration, if price is to push above here, then we expect price to continue to push up higher. And for those who've been watching my daily breakdown and keeping up, like I've been telling y'all, alone we can remain above 5,000. We could be seeing gold continue to push up higher. Now, how do we confirm off of this support level? Because obviously you don't want to just buy into a support level. I mean, could you? Yeah, I mean, you could buy into and put stop loss below here. But if you're a person who like more precise entries, then we want to kind of scale down on a lower time frame, right? So we did close bearish on the previous day, right? And usually when you have, but you also got to look at the fact that we also had this nice little rejection beneath here. Now, usually when price closed bearish, usually just from a candle behavior standpoint, you expect price to push up, and then push back down if it closed bearish. Vice versa, if it closed bullish, you would expect price to push down and go back up in this direction, right? In this case, price did close bearish, but you have to understand you can't just use candles by itself. You have to rely on structure as well too. So right now the structure is still bullish. So to confirm this, right, and to make sure that we're not going to be pushing back below here and going lower, right, we want to go down to, right, the 4 hours. So we go to 4 hour, right, we can see here that price is showing some type of weakness. So we can see how price is back above the support area, right? So we can see how price is slowing down, right? So what we want to see, you want to see that on this 4 hour candle, you want to see price close bullish. And then also for a more precise entry, if we go to the hour time frame, right, we want to see on an hour, we want to see these two type of one of these type of transitions. So right now, right, you can see here that we want to see either one of these two transitions. We want to see either price, either how it is right now, coming down and break above and retest, come higher, or we want to see either price push down, lower, and then retest, make a failure, and break out of that. So either one of these two transition phase, right, will work. So as long as price make one of these kind of transition phase off of this support level, that'd be a clear sign. Because like I said, you don't want to just buy here and then your stop loss way below here. You know what I'm saying? So that's a huge. So I think it's more easier just to wait, and that way, if price don't do this right, then guess what? You're good. It didn't. This is why I say your goal is not to predict price; it's to let structure tell you the story, and you follow what structure do. So I already have my overall bias um, direction. So now we're on a clear support level where it broke out of. So now I want to see price give me a nice clear breaking structure, some type of shift in market structure or something to show that, okay, hey, look, it wants to push up. And as long as we can get that, then this will be a good area to buy and take a chance on, compared to just buying into this and have a stop loss below here, right? And then if we look at yields, if we go to yields, we can see how on yields that price has been pushing down lower, and that's actually support gold, because when yields is going down like this, then when yields is going down, that means gold is going up, and when the yields is going up, gold is going down. So the fact that yields is going down, that actually support gold to even go up even more. All right. So let's look at DXY. See what DXY is doing. So if we look at DXY, we can see how obviously on the previous week we did close bullish, right? And then so far you can see how we have this nice retracement. So you can see how price open, retrace down, and it's pushing up. So here's my thing is this. So like I told y'all, for those who've been keeping up, I've been telling y'all for the longest. Like right now, yes, we are in a downtrend on a weekly time frame, but we also are in a current transition phase. You can see how every time price came here, it bounced off this level right here, right? So The question was, were we going to continue to see US dollar dip back down, or were we going to continue to see US dollar continue to push back up? So we're still in that. So right now, we're in this current phase, right? Let's break this down. We're in this current phase of the US dollar. So if we line this chart up, you can see how price push up, push back down, right, and end up pushing, retracing back up, making a lower high. What lower high mean is lower than the previous high, right? Breaking this low, making a lower low. So this shows you clear as day from a structural standpoint that we are still in a bearish direction, right? On DXY. So right now we're underneath this resistance right here. So this is where we at, price retest, and we here now right underneath this resistance. But what I can say is, if price happen to shoot above here and close above this resistance level, right, then this goes from a resistance to a support level, right? Because we are, look at the overall picture, we are in a transition phase, right? So if price managed to break above this, then this goes from resistance to support. So but right now we are underneath this resistance. So the weekly is still bearish, right? But if we go to the daily time frame, we can see on the daily time frame where the daily time frame is also bearish. We can see here that we're under the 50-day moving average, but we can see as well that we're in a current transition phase. We're still bearish, but we're in a current transition phase. What that look like? That's this right here. So you can see here that that's this line up right here. That's price making this fail low. So if price happen to break above here and retest, which goes back to the weekly, if it breaks above this goes from a resistance to a support level. That would be a clear breaking structure, right, to see price push up. And like I've been telling y'all, if we can see US dollar push above this area, that'd be a clear sign to see US dollar start pushing up strong. So it just really all depends on how price react off the daily time frame right now. So that's where I'm at with US dollar. So the dollar index. So why is this important? Because when we look at pairs like UJ, right? The only thing I trade is really UJ. So I don't trade as far as like forex pairs. I don't really trade anything other than UJ, and I also trade yen too. I trade yen futures as well too. So those like kind of good combination because yen futures does the opposite of UJ. So, but if we look at UJ, right? So we can see here that on UJ we're actually been pushing back up, and you're wondering why? Okay, why are we pushing up? Well, if we look at it from a quarterly perspective, on the previous quarter, let's kind of move these candles. On the previous quarter, we actually closed very bullish, right? Which is why I got these 2Q, 3Q, 4Q, because these are my quarterly levels where I expect price to retrace at a certain percentage, right? So this is like 2%, 3%, 4%. So on average, UJ retraced about 4% averagely within the quarter. So you can see how we came here, made a clear breaking structure, and then push up. So right now is that's why this is pushing up off of that quarterly level. So if we look, we can see how also in the previous week we closed bullish too. So you can see how price is also pushing strong off of that. So like I've been trying to tell y'all, when you apply structure along with candle behavior patterns, like as you see here, price closed bullish down the opening on the next week, price open, retrace down, and push up. So and then you can see here, even on daily, that prices made a nice push, fell low, and then push up higher. So here's my thing. So this is going to be a huge cue right here. If US dollar make that clear break right, then that give a clear signal that we could be seeing US dollar push up. So what that means for UJ, we are in an up momentum, but what that means is that support this to continue to go even more higher, which lines back up with our quarterly momentum. So that's my input for this market. Actually, let's look at S&P too as well. Give a little update. S&P. S&P hasn't really done too much. You can see how we still kind of choppy, right above this 50-day moving average. So this kind of operate as a support level, right? But like I told y'all, the moment we break below here, retest, and that'd be a sign that we could be seeing S&P continue to push down lower. But as long as S&P stay above this 50-day moving average, we're still in position to still push up higher, even though we're choppy and showing signs of weakness. It's just a matter of just waiting. Like I said, our job is not to predict. You just have to wait. And by the previous day closing bullish, hey, today might even close bullish. because we closed bullish the previous day. So it can retrace down a little bit and continue going up higher. So that's why I say, like, you hear all these things that, hey, like S&P can drop, the market could crash, blase blase, but at the end of the day, like, all that don't mean nothing until the structure until the structure, you know, tell the story first and show signs of what it want to do. You know what I'm saying? So, which it is showing weakness. So other than that, that's my. Oh, and also look at the VIX. One last thing, the VIX. The VIX is very important when looking at S&P. So, like I told y'all before, just understanding history on the VIX. Usually when it come back into this level, it usually do push down, which we can see here. So as the VIX continue to push down, that support S&P to continue to remain strong. But like I said, once it break above here, break above 22 and start pushing higher, then that's not good for S&P. We can see S&P drop. So as long as we stay within this range, it can fluctuate all day long. But as long as it's keep pushing back down here, everything, then that still support S&P to continue to remain strong. So you will pay attention to the VIX as well too when watching S&P. So, and for those who trade Nasdaq, S&P and Nasdaq move the same way. So, other than that, I hope this gave y'all more clarity on how to trade smarter for the rest of this trading week. And I will see you on the next market breakdown.